Welcome back to Security Token Show interviews. This week we have a special guest, Simon Keefe from Calastone. Simon, how are you today?
Hey, Jason. Fantastic. Thank you. Great to be with you.
Absolutely. Thanks for coming on. You guys had a very exciting announcement this morning. This morning being Thursday, April 3rd, that we're recording this here, and that's that you guys are officially launching your Calastone Tokenized Distribution platform here. So tell us a little bit about this announcement and what really this is, and the impact you think it'll have for funds here.
Yeah, absolutely. Thank you. We believe this is a landmark announcement. It's been a long time in the works, working with the team here at Calastone, but with a number of clients, big asset managers around the world to bring this to fruition. So really exciting times that we've got the products out there and live. And essentially what we're doing is making it really easy for asset managers in the traditional space to launch products into the DeFi world. To cut through the red tape and kind of weeks and months of integration and different pilots that they have to do, to make it simple to use their existing connectivity that they use for distribution in the traditional world today, extend that out to enable asset managers to reach new DeFi venues via basically any public or even private blockchain that they require.
That's really cool, and I love that you guys are doing both public and permissioned chains here. I know that I think I saw Polygon, I think I saw Canton in there, a few others, right? So that's fantastic. But let's stick a little bit on topic of distribution that you just touched on here, because I think it's really important. The tokenization space obviously is somewhat fragmented, and to have someone like you guys that are already kind of plugged into legacy systems, it works well, right? So if I'm understanding this correctly, if I'm an audience member here to understand this announcement, essentially what you're doing is you have fund asset managers, right? The funds that if they want to tokenize some of that fund to be able to distribute on chain, they can, and it all connects back to the legacy systems for appropriate transfer agency and all of that. Is that correct?
That's exactly it. We've been working with a number of asset managers around the world for the last 2 years to really solve that issue. So to link up the traditional world with the DeFi space. Many have tried it and have kind of experienced proof of concepts where they've done one-for-one connectivity to a certain chain and certain addresses on those chains. But what we wanted to do with clients was to make it kind of scalable for the future. And importantly, enable them to do it in a place that they're comfortable acting now. So they don't have to have enormous change on the back end. They don't have to change the traditional fund that sits there, at least initially. That they can simply get those products out to reach new investors on a multitude of different chains, but do it at a cost that makes sense. So, to attract new investors at a cost that is much more in adherence to the existing costs in the asset management industry, and not to put kind of layers on top of the existing costs just because you're distributing it on chain. And that's been one of the big drivers.
That makes total sense to me, and I do want to dive a little bit deeper into the costs in a second. But as you're kind of exploring this and whatnot, what would you say is the biggest challenge that you guys had to arise when you were putting this together? Because as you mentioned, many have tried it and whatnot. So what's different for you guys, and what was the biggest hurdle when you were exploring, again, this distribution and legacy system connectivity?
Yeah, so I guess the main USP of the Calastone product and product set and proposition is exactly that. It's the heavy lifting that asset managers and their partners kind of have to suffer today to get a fund on chain. You can do it once, but then pretty quickly, if you're in the DeFi space and you want to connect into the TradFi space, you pretty quickly realize that integrating into the traditional world isn't that easy. It can be pretty complex. There's a multitude of different connectivities needed and different parties and players. But what we bring to the table with our asset managers is our network. So we have a network of 4,500 asset managers and traditional distribution venues. We've done all of the hard work, all of the connectivity into the traditional rails. That's already there. So the challenges that distribution venues on chain face is having to interface into that world. But we already do that for our network. So the challenges we had were the opposite. It was trying to take the traditional world and apply it into the DeFi space. But no, we are a technology company, despite just being a network. And we've managed to get over a few hurdles, regulatory hurdles, uncertainty, definitely. nervousness from asset managers was a big hurdle. Can they do it? They want to do it. Can they do it? Where is the money? Who's going to buy the funds was a
Right.
big piece. But we're starting to see more demand, certainly coming through our networks, and our asset managers, importantly, are seeing more demand coming directly into them to start to buy into tokenized funds. So now we've got an end-to-end model that works, is scalable, connects into any of our asset managers, but on the other side connects into any chain.
Makes sense, right? And scalability is the name of the game here, obviously, and of course, and no one can say no to cost savings and making things a little easier, right? So I know comes also in connection, essentially, to a report you guys just launched, maybe like a month ago, if that, talking about cost savings in tokenized funds. You have a whole white paper research that you guys put out there, which I found very interesting. But one of the things that you guys found was that there's $135 billion per year worth of cost savings that we could be extracting here by putting funds on chain. Tell us a little bit about what you're seeing in terms of, operating costs and, this image here, and what you're expecting tokenization to really have the most impact on.
Sure. So the distribution piece that we've been speaking about is just really the tip of the iceberg. Now that's where everybody's looking at the moment, and where the kind of early wins are. And there is, great opportunity there for asset managers, because ultimately asset managers want to see new monies coming into their funds. But when you kind of peel back the layers of the onion, in the traditional world, there's a lot of complexity. There's a lot of complexity that's grown over 100 years or so of a mutual fund that's just been added and added and added as the fund has evolved. And nobody's really taken a step back to look at that construct of a mutual fund or any collective investment from an asset manager, look at the technology that's available now and try to see the efficiencies that we can bring. If you redesign the mutual fund model today from scratch, you certainly wouldn't design it as it is and has been working in the marketplace. So we've been working with a number of our clients, again, globally, to look at the application of tokenization, DLT, and technology just in general, to look at what that could mean throughout the whole construct of a mutual fund and an asset management product. So we're talking kind of more the back end. So reimagining the middle office, back office of a fund. How do you construct funds? How do you service funds? Importantly, do you need multiple siloed parties all working on a different data set and having to bring those data sets together at certain points during the day or the week or the month to make sure that everything is interacting as it should be? It's really complex. So we undertook a piece of work, an initial kind of pilot, working with Schroders in Singapore, to look what it would take to get everything on chain. And we were very successful. We did that. And we started to realize that the efficiencies are huge. And the figures that you mentioned, 135 billion, that we feel that, well, not we feel, actually asset managers that we surveyed confirmed to us that they see being up for grabs just by bringing tokenization into the issuance and servicing area of mutual funds. Personally, I think it's a lot bigger. It's a lot higher than 135 billion.
Very
it
well.
Really is.
Right, and this takes into account, obviously, funds across different jurisdictions and different asset classes and whatnot, which I do want to dive into a bit more. I'm going to pause here, though, for anyone that's watching on the Security Token Show. We will be moving on to the next section of the show, but if you want to watch the rest of this interview, it is going to be on STM TV official on YouTube. So go ahead and check it out there. But we're going to keep on diving into some of these cost savings and really what Calastone is powering here through their new platform. Simon, so let's talk about those savings a little bit more, because there's also growth in projected costs here. And again, for anyone that's listening here, let's remember that a lot of these steps are things that are involved in transactions, but a lot of people don't think about them because they're not the sexy front-facing thing, but they are what powers this, right? And so anything that can be done, obviously, to save some cash here is obviously great for the fund, great for the investors. So I want to dive in. Tell us a little bit about these growth projections here.
Yeah, so and again, this has come directly from the asset managers. This isn't numbers that we've made up, but so these are real numbers out there in the marketplace today. So the existing numbers to issue and service an asset management product, a mutual fund, a 40X fund, a UCITS fund in Europe is huge. And asset managers, some of them weren't even aware of the size of the fees that they were paying, because they're somewhat hidden, in the background in their operation, and they just form part of the cost of the fund, and then also separately to that, part of the cost of the bottom line of the asset manager, which is really important. And the numbers that we were seeing today were something like 74 basis points is the real cost to launch a mutual fund today. That's not all being passed on to the investor. No, it doesn't cost 74 basis points to get into all kinds of funds, but asset managers are being squeezed on their profit margin, and they're actually consuming some of that cost themselves.
Yeah.
And then if you look at that squeezing of the industry, the providers that the asset managers use, when they're reviewing their products and services, those costs aren't coming down. They're going the opposite way. Those costs are increasing. So again, that 32% expected growth in fees is going to happen over the coming years. So it's really been an eye opener, I think, to a number of our clients to realise that they can't afford to stand still. They really have to do something now.
Makes sense to me, right? And again, to your point, the costs are going up. You have to change things. Not to mention, there's an opportunity cost now coming on chain, because there's interoperability. There's adding utility to these assets aside from just the distribution, of course, which is a fantastic and first very important step, of course. But let's remember that we're still maybe 10 years out from all of capital markets moving on. There's a lot more to do. So people need to start moving. We have seen some funds and asset managers start talking about, hey, this year we're actually putting some emphasis and focus on tokenizing. So let's talk a little bit more about the connection of the Calastone Tokenized Distribution product that you guys launched and the future of fund tokenization. Tell us a little bit about where you think the next step is for things to really take off here.
Yeah, so I think adoption absolutely this year is key. It's the key word. I think up until 25, we've been kind of in the foothills, not even that of fund tokenization, but we're starting to get a lot of traction in the marketplace as an industry. It's still early days, but we're starting to see the models that will persist come to fruition. And we're certainly, from interactions with our clients, we see this year as the big year of adoption. We've already got some clients lined up to go live on our products in the next few months, but importantly, with real money coming in from the demand side to buy into funds being on chain, and some really interesting venues that you'll start to come out as we announce them over the coming months. But again, this is just the tip of the iceberg. It really is. The big use case that we see is around collateral. There's a real scramble to use tokenized funds, in particular money market funds, in the collateral space, and we're working with a number of clients there and banks again around the world to provide a much better collateral ecosystem to enable tokenized funds to be utilized in real time to meet collateral calls between providers and receivers of collateral. So those use cases are starting to come out as well, and will come again into market towards the end of this year, into next, and that's an enormous market. But the end game is much bigger. Much bigger. It's tying up that kind of back end that I was talking about. And to your point, Jason, the capital markets world. Now that will undoubtedly be the last mover to come on chain in general, but we're starting to see some early movements there. And now once you can get capital markets, the fund issuance and servicing, and distribution on chain, the opportunities are really limitless on what we can do as an industry.
100%. You're totally right with that, Simon. And again, can't stress enough the importance of this technology here. You mentioned demand. So curious, are there certain asset, sectors or markets or asset classes or types of funds that you're seeing having the most interest and demand, either tokenizing or investing into a tokenized fund? What are you seeing on the demand side?
Yeah, I think it's, there's the obvious one that is very true out there at the moment. It's been talked about a lot, is money market funds.
Of course.
That's really driving the early adoption. And it's the big area of growth at the moment in tokenization when it comes to the funds world, at least. So we're starting to see a lot of treasurers, so digital treasurers, be that corporate treasurers, so treasurers of DeFi companies that have got pretty hefty balance sheets, either sitting there in their own coins or even sometimes in fiat, that want to buy into tokenized assets, but in particular tokenized money market funds, pretty much as traditional treasurers do today.
Right.
But we want to do it in a much better ecosystem and do it on chain and make it much more efficient. So that's an early use case that we've been seeing, and we'll share some more of that in the coming months with some real treasurers coming on board. Obviously, the foundations as well have quite a bit of cash sitting there, and be it again in coins or in fiat cash, that their treasurers want to invest into tokenized money funds. Then we're seeing more use cases starting to come out. Obviously, there's the big use case of stable coins and the backing of stable coins, but we're starting to see other things with tokenized funds being used as the instrument to be utilized in settlement itself, and even potentially down the road, looking at tokenized money market funds as being a rival to stable coins themselves. So we're starting to see that come out of the conversations that we're having in the marketplace. And also early days of the retail play, so not just money market funds, but more tokenized versions of traditional products as kind of on-chain investors start to really mature in their thinking, in their investment requirements, and require diversification. They're looking to get into more traditional products, but do it from their existing wallets. So we've got some asset managers that are looking to launch more traditional retail products on chain as well.
Very cool. And we just saw Hamilton Lane release theirs on Republic for retail, a $500 minimum, which we saw Hamilton Lane, of course, take it from, millions in minimum investment. Then they go to, people like Securitize and ADDX on Singapore, right, and bring that down to tens of thousands. And now you have retail in the hundreds. Just goes to show, again, the power that tokenization enables is really being able to fractionalize to more granular levels without impacting too much, aside from in a positive way, the cost of being able to do this, to your point, Simon, at scale. Awesome. Simon, this has been fantastic conversation. Thank you so much for coming on. I appreciate it. And is there anything else that you think the audience needs to know about fund tokenization or Calastone and what's going on next?
Yeah, so I'll definitely keep an eye on the newswires, because there's lots more exciting content coming up and some more product launches from Calastone and others as well in this space. I would absolutely look out for the ability to provide bespoke products to end investors. Absolutely where this space is going. And the important thing is that we can come up with these new approaches at the front end on chain, but the back end has to keep up. It's not fit for the kind of extensibility that we're talking about, of millions of kind of fractional owners of funds, and being able to register those owners. So pretty much I think we'll see throughout the rest of this year the back end of the traditional world start to take notice, and regulators kind of being forced into moves to bring more of the world on chain.
I love it. I'm excited to see everyone that's going to be jumping in now, and obviously you guys are making this a bit easier for everyone too. And so, excited to see everything that's to come. Thank you, Simon. I appreciate it.
Thanks for having me, Jason. Great to speak to you.